Hi Kevin, how you doing?
I'm amazing, Adam. How are you?
I'm good.
So I'm Kevin Cross, Foundations Real Estate at Keller Williams.
Adam Hefner, First Rate Financial. And
we're your real estate ninjas, man, making magic happen.
Ninjas, that's right. We've been working on our artistic skills.
It is, it's right. I did this with easy erase markers because I was all out of crayons and finger paint. So what we've got here is we're going to talk a little bit today about a tough topic, which is how is energy prices and how is the price of oil affecting house values and investment property, specifically in acreage, but in generally most of Alaska. So what we've got here is this fantastic diagram. We really take this subject and simplify it and wash away all the emotional shrapnel and information that is not specifically relevant to your real estate.
And Kevin and I both have fielded a lot of questions just in the last few weeks about our thoughts about how the price of oil is going to affect us. And as you know, Alaska is heavily dependent on oil, less so now than we have been in the past, but still it's a huge part of our economy, and it's something that we all need to be looking at.
So it's an interesting thing. We all think the immediate response is that when oil prices go down, it's horrible for the state, and it's tough because we're collecting less in taxes. But there's another side of that, which is where does that money go?
And that's the key right there, is that the money goes somewhere. It doesn't just
disappear.
Evaporate. So the money just shifts hands, right? And so we see a shift of the wealth, and that's what we've got boiled down here for us to explore today.
And we're going to show you the short-term and then the potential long-term implications of oil prices and where that money goes and how that affects you as a property owner. So over here we have a barrel of oil, and the oil stays high in price, which is great. The state gets more money from taxes. They're extracted from the oil companies. The oil companies are doing great. And here our higher-end executive, high-end jobs are doing wonderful. Notice the top hats. Notice them holding hands in unison. Notice the money signs. That translates into bigger properties, more luxury home sales, houses $500,000 and above, and bigger toys, boats, planes, those kind of things that are afforded for a really phenomenal economy where you have lots of high-end jobs, okay?
Now, the converse, though, is if the fat cats have got more money because oil prices are high, oil affects the cost of goods that you and I pay for, namely gasoline, right?
So if you're a service sector employee, you're a guy who just, I work at Costco, I work at Cabela's, I got a small landscaping company, I got whatever, we feel those pains because of down here. Listen, they're hitting it at the pump. Now everybody basically has got about a $300 to $500 a month bonus based on average fuel consumption and what you drive a month in your pocket. Okay?
If oil prices go down,
yep.
right?
And
so
oil prices went down, you suddenly, you know, you feel it, it feels good, a little loosening. We see that happening in our housing market, and what happens? So over here we have if prices go high, that's fantastic, prices go up, and the value of property goes up in the form of equity. The value of the property goes up. There's an opposite side of that coin, which, if used strategically, can benefit you as well. Oil prices go down, it means that generally across the board, more people have money in their pocket. Not just these guys up here, although their jobs are more at risk, but everybody who's service sector economy, which is really like 75% of the population of the state. Okay?
And then these people have more money. So if your average Joe's got more money, he's got another $200 or $300 in his pocket.
Where does that money go? Where are they going to spend it?
Yep. So that goes into housing. These guys are, maybe if they're tenants, maybe they're going to stay tenants, but they get a slightly nicer unit that they can rent now, right?
We see an increase in what we call Class B rentals. That's places that rent between like $1,400 to just under $2,000 a month. We see an increased demand for those rentals. We see an increase in buying pickup trucks or affordable toys, not necessarily boats or giant side-by-sides, but nice vehicles. And then what's great about that is if they have more money in their pocket, it transfers to rents on properties increasing. Now the value on these may sit stagnant, and it may actually be kept from creeping up, because if luxury homes aren't selling, then there is that trickle effect where it keeps prices stagnating. However, the increase is in rents. So these properties are going to start cash flowing better because these individuals who typically rent have more money.
So what you see is you you see a push towards affordable housing, right?
That's exactly right.
You are going to see markets move up and down, but where you say the most fluctuation is going to be in this market up here with your high-end homes, because they're the most susceptible to economic changes, right?
That's right, because it's a smaller section of the market.
Bingo.
Now it's basic supply and demand. Whenever there's a little supply and a greater demand, that's, you know, it maintains its value much greater. That's still affordable housing. We got a housing shortage in this market. There's something like 20% less houses on the market right now than there were at the same time even a year or 2 years ago. So we've got less demand, but right there, it's affordable housing. If things go great and there's jobs, guess who wins? If you've got affordable housing, you win. There's more jobs, more renters in that pool. We see an influx of economic stability. If the oil prices stay low, then what you see is you see an influx of money temporarily at the pump into these, which means rents go up.
You're also going to see some of these would-be tenants down here moving up into buyers as they have a little bit more money that they can spend.
They're not buying these houses.
No, They're going to be buying affordable
homes.
Yeah.
Because that's their economic engine, that's the money that they make.
And the smartest of these individuals down here are going to buy something like we got pictured here, either a fourplex or a duplex, where they can live for next to nothing or maybe even free, right? And they can provide housing for other individuals. They can live for a lot less. And again, you're going to see prices stay very, very stable in that multifamily market.
Now the last thing is to consider location, and here's what we know, is that in times of economic insecurity or when we see a job shrink, it all contracts back to Anchorage. Okay? Right now, Wasilla market is booming. They're building lots of fourplexes, they're building lots of multifamily out there, but if energy prices do stay low, and there is a significant or a gradual decrease in jobs, the hub is going to come back to Anchorage. That's where you've got your Alaska housing, you've got your, you have your rental assistance programs, you have all that, is this hub.
We've got the airport, we've got the port. I mean,
we have those things that regardless are always producing, okay? Even FedEx, because FedEx is a hub to all of Asia, not even though it's one of the largest FedExes in the world right here in Anchorage. So again, the push here that we anticipate as, listen, I'm not an economist, but I sell hundreds of homes a year. I talk to people every day. I've got friends in the oil industry. I've got friends in all aspects, and we all digest this information. I serve on several boards. And to the best of the information that I've accumulated talking to dozens and dozens and dozens of people who are professionals, is this is the underlying anticipation of what's coming.
So if you want to know where to park your money, the safe bet is in affordable housing, multifamily homes, and Anchorage is going to be your safest bet.
That's correct. Although there are some phenomenal values in Wasilla, in the long run, if oil prices stay really low and it starts affecting job markets, you're much better off owning properties in Anchorage.
The valley, though, Palmer, Wasilla, you are going to see significantly more upside potential as growth happens. I mean, overnight growth leads to a knee-jerk reaction, which is move to the valley. The homes are very affordable.
So that's the other side of the coin. If it goes phenomenally well, then you're absolutely right. It's supply and demand. The supply is in the valley, and they don't have the permitting and the building struggles that we have in Anchorage. It's not as hard to build. You can find amazing properties for a very low price out there.
Absolutely. And the value will come back. So even if we see that value slide off in the valley, it will come back. It's just a matter of how long. You're going to see more of an up-down cycle as you move farther away.
So the interesting thing is you're worried about the value of your house. If you've got a tremendous amount of equity in it and you're like, gosh, I'm worried, should I sell it now and take my equity? What does that look like? You know, perhaps now it'd be too soon to say whether or not you should sell it, but maybe what you could do is refinance it. Take that equity out, because you realize that equity is an imaginary number unless you sell it. But if you refinance it and you can capture some of that equity, capture some of the capital in your hand, go buy affordable housing. Or if you have something, if you have money or investment stashed away and you want to secure it, buy a commodity. Real estate is never worth zero, and no matter what the economic engine is taking place, people always need a roof over their head.
The big takeaway is if you want to know what's coming up next, you need to be working with a professional. You can get a hold of me, Adam Hefner, at First Rate Financial at 222-5505.
And I'm Kevin Cross, Foundations Real Estate of Keller Williams, 865-6529. And you know what, if you ever just want to sit down and brainstorm an idea of how do I take advantage of this affordable housing market, what can I do to become a landlord and start making phenomenal capital gains, we're the guys you want to talk to.
That's right. See you next time. We are the Real Estate Ninjas.
Go make magic happen.